Hey everybody, it is 1 o'clock and we are starting right on time today. Welcome to part 4 of steering your business through COVID-19. Here we are, just about a month, if not a little over a month into our stay-at-home orders, into just this whole new reality that we've all been living with, working from home or having our businesses impacted, having our kids at home. It's just been a new reality, and it's hard to believe that we've made it this far already. So, so welcome, and I am looking forward to continuing with giving you some updates on what's going on with all of the legislation and how that impacts your business. We also are going to talk a little bit about how to start preparing for the fact that even once we have kind of rebooted the economy a little bit and the stay-at-home orders have been lifted, that the country most likely will be into a fairly lengthy recession. And so I'm going to have some, the beginnings of some ideas of what you should start working on in preparing for that. So that would be something that I think everybody needs to be prepared for. So we need to get through this initial shock of, oh my gosh, you know, we are so heavily impacted by what is happening right now to our businesses and the country. But once the COVID scare portion is over, I do believe we are still in for some adjustment this year. So we're going to talk about that. I hope everybody is enjoying the warming weather. We got a little bit of rain, but it's sunshiny today, and I'm a summer girl, so I'm looking so forward to being much warmer than it has been. So I love the other than the allergies, I love the warming weather. So excellent. So I'm going to let you know you can chat with me via the chat. You should have a chat bubble. You can also put questions in the Q&A section, and I will be reviewing those periodically as we go through some of these topics today. So feel free, if you've got a question about something we're talking about or a question that you haven't had answered yet, I will try to get through all the things today as much as possible. So I'm just going to go ahead and share my slides again. Let's see, hop over here. And here we go. Okay. So like I said, we're in part 4. So last week was actually technically the end of tax season, hit on April 15th. At least that is what my mind and my body was telling me. So that was my 24th tax season. And for the last, I would say 10 to 15 years, I have always taken the last part of the week of tax season, the last day of tax season, off. So as much as I was planning on just working through it all, something in my brain on last Wednesday just finally said, hey, you were supposed to be done at noon and you need to shut down and relax. And so I did take the last part of last week off and did not bring you a portion of this series because I just needed to shut down. And so apparently 24 years of tax seasons, my body is attuned to 3.5 months into the year. You got to shut it down for a couple days. So that's what I did. But I'm back at you now. So let me jump over to what we're going to talk about today. Let me grab some water. Okay. So we have got a continuing saga of the PPP, which would be that the funding ran out, and this morning the president was going to sign the additional PPP funding. Essentially, it's going back and amending the CARES Act to put more funds into the loan processes that they had funded on starting April 3rd. So that funding ran out late last week, and what happened was there were a lot of applications that were in process, that most of those financial institutions kept them and said, hey, you'll be next when the funding comes through again, assuming that there was going to be more funding. The indications are that this will probably be the last round. So once this comes through, there won't be another round, because they're predicting that within the next 2 to 3 to 4 weeks, the stay-at-home orders are going to be lifted and businesses will be able to get back to business as usual. Does that mean that they're still not going to need some help? No, they're still going to need it. So that's coming, and that was funded to actually come through and have a portion going of these funds going towards the smaller community banks and credit unions, and not just to your big national banks. And I would say that of the funding that happened in my world and within my clients and my friends and people that I know, the smaller banks actually were the heroes in this. They were the ones that really just went out and made sure that their customers were taken care of. Some of the larger banks really dropped the ball. They had a lot of bureaucratic red tape they had to get through. They spent some time putting in portals and electronic applications and all of these things that the system just immediately bogged down, and applications weren't able to go through. And so they tried to automate the process. And I will tell you that the banks that actually did the physical paper legwork on it had more success. You know, they worked their butts off, though. I mean, they really had to put some time in. And I had one of my bankers said their bank was working 24/7. They put an overnight shift in that was working through these applications and getting them to the next step, so then the banker could come in and keep pushing. And so they were very successful in taking care of their small businesses. So recognizing that a lot of these funds may not have gotten through to the small businesses, this new portion of the PPP funding will actually have some funds specifically earmarked for the small business. So we're also going to talk about unemployment updates. Things have finally started rolling. There have been updates to websites. There's been updates to frequently asked questions. There's been a lot of updates happening there. The economic impact payments, what's happening with that? Those are your stimulus checks. Have you got one? And then we'll talk about the EIDL funding update and where that stands and how that is impacted by the newest round of legislation. All right, so we're going to start with what's happening now and what happened with the Paycheck Protection Loan Program. So this was designed for small businesses, which would be considered 500 or fewer employees. They really were intended for the small businesses because that makes up the majority of businesses in the country. There has been, there was news stories about some of the very large entities and public companies being able to get through some of these loopholes because they have, maybe they have multiple locations, but under each location they had fewer than 500 employees. Therefore, they got to apply and they ended up with millions of dollars. And then you hear the stories of them saying, oh, we're going to give that back, which seems very humanitarian of them to do, except for the fact that they shouldn't have been applying for it to begin with. So yeah, bad publicity made it come out to them and they said, okay, let's give that back. So the intent really is for the small business to be able to rehire employees or not lay off employees. And with the first round, there was, the funding is still coming in from that first round. So if you got in and you had what is called an E-Tran number assigned to you through that first round, which really ended about the 16th, I think, was pretty much when the funds dried up, maybe, or was it the 9th? Anyway, it was one of those Thursdays where the money was gone. They said they're going to cease taking applications, and they kind of closed down that program until it could be refunded. If you got an E-Tran number, then your application was actually in process and was going to be funded. And so some of that funding is still continuing to come in for small businesses. I had somebody fund overnight last night. I had somebody fund on Monday, somebody fund, so it is still trickling in. So if you got an E-Tran number, if you don't know if you have one or not, you need to check with your banker. So for that first round, did you get into the queue, or did you actually get to the point of, hey, we got you into the system and it's just a matter of us finishing the paperwork and getting you the promissory note, and then we can transfer the funds. So once those funds, once you've signed the promissory note, the banks have to fund it within 10 days, but they have been funding it. A lot of banks are saying you'll have it within 24 to 48 hours. So that has been holding true. The signatures are all being able to be done electronically, so people are not having to go into the bank, wait for the mail, do anything like that. So if you got the E-Tran in the first round, then great. If you didn't, or you're not sure, you should check with your banker, find out where you are in the queue. Do they need anything else? Are they going to require a new application? They should not. The form, as of this afternoon when I checked before I came on, the actual PPP application form has not been updated. So they haven't changed anything as far as what that form is going to look like. So there should be no reason why you have to fill in a new form. I was reading a couple of things where some of the larger places, banks, institutions have, since the funding ran out, put in a portal. And so they're suggesting, hey, maybe this would be faster for you if you put your application in again through the portal. If you're in a very large institution that you're working with and you do not have a personal banker that you're dealing with, I would be very careful there because you don't want to move where you were in line. So it's supposed to be on a first come, first served basis. We've all heard the rumors and the stories of Chase and other entities that, were for sure putting maybe bigger clients ahead. Was it true? Was it not? I don't know. But the rule states it should be first come, first served. So just be careful on resubmitting an application. If you get confirmation from your bank, you talk to your bank and they said, no, you never got an E-Tran number and you're way down our list, there are other options for going to apply. There's a lot of the fintech companies, so you can go through Intuit, you can go through Square, you can go through PayPal, you can go through, so many of these organizations are accepting applications. Where that's going to put you in the pool, we don't know, but there are options for going to another bank if you don't feel like you are going to be in line where you need to be. Until you have an E-Tran number, technically, you can probably apply at another bank. Once an E-Tran number has been assigned, you can't get more than one PPP loan. So you would have to be very careful in making sure that you tell the organization that has funded you, that you're accepting it. And then if you get another acceptance, you need to tell them you're declining it. You can't have more than one. So for those who got funded in the first round and got some cash coming in last week or this week, there's a couple of just housekeeping things that we are doing to help with determining how to account for these items. The PPP is going to be a short-term loan. So we are adding a chart of account to your balance sheet. I've just been calling it PP loan and whatever the bank name is, because these are all funded through a bank. And I'm setting that up, putting the entire proceeds that come into your bank account, offsetting it against this current liability. The next thing I would suggest that everybody be doing is that you need to be doing a projection of what your payroll costs are going to be for the next 8 weeks. So when you got the funds, maybe you're a weekly payroll, maybe you're a bi-weekly payroll. Your goal is that you're going to spend 75% or more of this money on payroll costs. And in my research in the last 24 hours, I am going with the payroll costs are going to be defined for forgiveness the same way they were defined for determining the maximum amount of the loan. So I would say you're looking at your gross payroll, which is the number that we used to determine how much of a loan you were going to get. It's going to take off of that amount any amount that you may be paying out for the sick leave was mandated by the FFCRA, or the expanded family medical leave for having people at home with their kids. So you want to be making sure that your payroll company is keeping track of those types of pay items accurately. If for some reason they're keeping track of those items and for whatever reason not subtracting it from your 941 payment, then you have the opportunity to do that when you file your second quarter 941 form. So I am telling my clients, yeah, you short your 941 payment at the time of the payroll, at the time you paid that sick leave, so that you can take the cash benefit of that right now, which is I have to pay these people under this act and I shouldn't have to be out of pocket for it. So, but when we're looking for how much of this PPP loan is going to be forgiven, you are looking at not being able to include those types of pay into the gross payroll calculation. Then the other pieces that were included in your payroll costs are the employer portion of health insurance. So presumably in 8 weeks, if you pay your health insurance monthly, you will be paying two separate bills. You may be paying May, you may be paying June, depending on the timing of when your insurance bills are due. And you are going to be calculating how much of that is the employer responsibility. If you are one of those employers who is lucky enough to be able to fund the health insurance 100% for your employees, then you will get 100% of that bill as part of your payroll costs. Otherwise, you're looking at typically at least 50% of the individual payroll costs. A lot of times that's not 50% of the bill, because the bill may include you allowing your employees to cover their families, and they're covering their family. They have to cover their family with withholding. You're not covering that, but you are required to pay at least 50% of their premiums. So you're going to want to make sure you understand how much of that is the employer cost, and how many bills do you think you're going to pay between now and the end of this 8 weeks. The third portion of this is how much retirement funding. Some people pay this with each payroll, some people pay this each month. So we're looking at simple IRA matching. We're looking at only the matching, the employer portion. So if there's any portion of a 401k plan that you match, 1%, 2% on each payroll, then that is the portion that you will be able to include in the payroll costs. So, and the last piece is going to be a little tricky because it allows you to include in your payroll costs the amount of state unemployment and local earnings tax that may be related to payroll, which in St. Louis, that is the P10 costs. So if you are paying in city earnings on your employees because you're a city employer. The tricky part with this is, are they going to base it on when it's paid? Because a lot of people just paid it. They're paying it right now. They may not have had the funds yet. These are paid quarterly. So the next time it is due is going to be after this 8 weeks is over. So depending on when that falls, you may or may not get to include a piece of that into the calculation. If they're allowing, I can't imagine that they would allow the accrual of it. I think they want the proceeds to be used for it. So that may be a missed opportunity because of the way Missouri handles its payroll taxes. So we may not be able to include that. So you're going to do the projection for your payroll costs, and then you're going to compare that projection to the amount of the loan proceeds that you received and determine, is that at least 75%? If it's at least 75%, then that should be forgiven based on other things happening. It's not just I paid it, but you kept a head count of employees that was comparable to another time period. I'm not sure what they're going to compare it to. If they're going to compare it to the beginning of this year prior to COVID hitting, or if they're going to say, look at your 2019 head count. Not sure on what that head count's going to look like. And they talk about full-time equivalents, and there's a little discrepancy on, do you consider a full-time equivalent somebody who works 40 hours or somebody who works 30 hours? So like for my business, we have 10 employees, but most of them are part-time. Some work at least 30 hours, some don't. So there's going to be a calculation there that we're going to have to research, and that's the funding, or the forgiveness of the funding, is based on keeping that head count the same. So you're rehiring out off of unemployment, you're bringing people back off of furlough and giving them paychecks. The other piece of it is that you don't cut payroll for individuals who make less than $100,000. You're not cutting their pay more than 25% during this time. So that gets a little tricky. I've heard of various scenarios where people's pay has been cut 25%, as in they're saying, hey, you're gonna, for this month, we want you to work for 3 out of the 4 weeks, and we're not gonna pay you that 4th week. That's 25%. So there's definitely some calculation here that's going to get a little tricky, but overall, as far as keeping track, you know, first figuring out how much of this is going to be used for payroll costs is your first step. If you do this calculation and payroll comes out, you're like, well, wow, I'm expecting my payroll costs to only be 50% of this loan by the time this 8 weeks is over. Well, then you might want to do one of two things. You can start prepaying, bonusing, using some of that money to increase pay somewhere. There may be opportunity if you're an owner and you receive a paycheck that you pay some of that out to yourself, so that even if after this 8 weeks you can get the loan forgiven, you can then lend that money back to the company. The intent is to use it for payroll, is to bring jobs back. I think 75% of this being payroll costs, based on how it gets paid, depending on if you're weekly, biweekly, or monthly. You really may need to play with some pay period analysis here and figure out if you need to accelerate some of that into the 8 weeks. Because technically the 8 weeks is supposed to start when you get the money. So if you got the money today, you would have 8 weeks from today. If today's a pay day, and you could get out and you're a weekly payroll, and you can count today's payroll because that's the date of the payroll. But you need to start just getting a handle on how much of this is going to be forgiven. The other thing that we are recommending is that you are keeping paper or digital copies in a separate place for all those things that are going to be considered forgivable. So for every payroll, keep some sort of payroll summary showing what was paid on that pay date and the pay date and how many employees were on that payroll. You're gonna, if you pay your health insurance, keep a copy of the bill, have a calculation with the bill on how much was the employer expense. Same with retirement. You make a retirement payment, print something from the website, print some report from QuickBooks, do something to indicate when you made the payment, how much of that should be a portion of your payroll costs. And this is just going to aid in gathering up that information when they finally have the guidance and you need to report it back to the bank. You've got your backup, you've got your calculations, and it's just a matter of summarizing it all for them. The other things that are going to be considered forgivable, as long as the payroll is 75%, the other 25% of your expenses could be for rent if you're renting your facility, mortgage interest if you own your facility, and that means you're going to make a principal and interest payment, but only the interest will be forgiven. So if you have a $3,000 mortgage payment and only $500 is interest, only $500 goes towards that. Utilities, and I would say utilities are going to be including telephone and internet for sure. And then there is some question there on rent as far as equipment. Does that include leased vehicles? Does that include the mortgage interest is the only forgivable piece. You can use the loan, I believe, for interest on debt that you had in place prior to February 15th of 2020, but I'm not sure that portion is necessarily forgivable. So same with your payroll costs. You're going to want to keep copies of these bills that were paid during this time. And I will caution you, don't pay the bill and not send out the check. You want, by the time this 8 weeks is over, as much as possible for these payments to have cleared the bank, because we do not know what is going to be required yet for the substantiation of the payments to be forgiven. Does it have to have cleared the bank? We don't know. Are you going to have to provide bank statements to prove that? we don't know. So there's still a lot of questions, and we expect that there will be more guidance coming from the Department of Treasury on what the banks are going to be looking for, and hopefully they standardize that, because obviously the application process was not standardized. It is now, but here we are 3 weeks later. So they should have some time to get this standardized, we hope. But start just thinking ahead of, keep a separate copy. Don't take that bill, and if you're still using paper bills, don't take it and just file it, you know, with your other bills. At least make a copy of it and put it in a PPP file, someplace that it's going to be really easy, because we don't know how quickly they're going to expect to have the information in order to determine the forgiveness, and you want to be ready. Okay. I'm going to jump over for questions real quick, see if anybody's got anything. Okay, so one of the questions we have is for self-employed. Can we pay ourselves if the timeline gets tight to spend it? So here's the craziness of the self-employed portion of this process. So in order to get a PPP loan, a self-employed person was allowed to show them a copy of their Schedule C. You take the Schedule C from 2019, divide it by 12, multiply it by 2.5. And that comes up with what they expect that your payroll, it was essentially a self-employed person's payroll cost, which they were calling income replacement. So in order to get forgiveness for that income replacement, they really, the indication is in the Treasury Department guidelines is that the self-employed person is going to get almost automatic forgiveness for 850 seconds, which is 8 weeks out of 52 of their 2019 Schedule C, without any proof of anything. In addition to that, you should be, as long as that number is at least 75%, you would also get a portion of, you know, if you had some utilities that needed to be paid. But what they're thinking is that most self-employed people don't have a rental facility. They don't have some place where they're renting. They have very low overhead. They're working from home. So it shouldn't be too hard for them to have 75% of their income coming from their work. So I haven't found anything that says that you are going to have to prove that you made money during this time and you paid yourself that money. It's not saying that you need to have taken a draw. Nothing says that. It just says they're going to forgive 850 seconds of that 2019 Schedule C number. So more information I'm sure will be coming out in how to calculate and what's going to happen with that. But right now it is like, hey, it's kind of free money for that self-employed person. Okay. And then a follow-up question from Becky is, for self-employed, is that home mortgage interest payment forgivable? Not 100%. I would say if they allow it to be forgivable because you're using business use of home, it will be the portion in relation to the percentage of the home used for business. So that may trickle down to a very small amount. You know, if you use 10% of your home for business, then only 10% of the mortgage interest, not the entire house payment, would be forgivable. So yeah, we definitely are still going to have to get guidance on the self-employed. We have gotten guidance that they can get these loans and how to calculate it. As far as the forgiveness, it gets a little murky, but everything I've read has said they're just going to say, okay, you know, 2019, your Schedule C said this number, we're going to take 8 weeks of that number, and that's what we're going to forgive as your income replacement without proof that you spent it. So, and that's what's getting tricky, is because a self-employed person does not necessarily take their profit is not their income. A lot of people, you know, the money just sits there. Some take draws, but that's not considered an expense to them. So to say, I have to pay this to myself, it gets a little weird because you don't, why would you have to pay it to yourself? You never have before. So I'm sure there will be more guidance coming on that. So stay tuned. I'm sure we'll have more. All right. So continuing on this, the end of this slide, we will look at my other advice on this is you got this money, you've calculated how much payroll you're going to have, you've got some other expenses to go with it, but don't spend all that money on other bills to pay your vendors, to pay your credit card bills, to any of that, unless you have other money coming in to replace it. So there's a good chance you are going to have a portion of this money that you are going to have to pay back. And that means that payments are going to start 6 months after the 8 weeks is up, or 6 months after the loan was funded, excuse me. You're going to have a portion forgiven. You're going to have a portion that you're going to have to pay on. It's going to be tough for people to actually get all 100% payroll cost or forgivable. It's going to be a tough calculation. I mean, I kind of looked at it just for one client and I'm like, okay, well, just based on payroll the way it is right now, knowing that their payroll is a little bit reduced because they have had some people that they have put on unemployment or furloughed, they aren't paying as many hours as they were a month ago. Even looking at that, they could bring them back full time. If they did that, they may be getting close to a 65 to 70% payroll cost. Maybe, well, just straight payroll, I was at 58%. And then they've got if we add in health insurance, they don't have retirement. And again, the payroll taxes to me are going to be irrelevant because those payments are not even going to be, you're not even going to know how much to pay, and you can't prepay state unemployment. You can't prepay P10 tax. So some of those are going to get a little strange, but I'm saying don't spend all this money because you may, in order to get a bigger forgiveness, you may need to accelerate some payroll costs that aren't payable until after the 8 weeks. Maybe you're going to prepay it. Maybe you're going to, do some bonuses. Maybe, so you don't want to get to the end of the 8 weeks and not have the money to pay the payroll is the bigger piece. So just use some common sense. You didn't get the payroll loan to pay off a whole bunch of other debt. You can do that, I would say, with caution if you still have a stream of revenue coming in. If your stream of revenue has all but dried up, you are hanging on to this money to make your payroll. And hopefully those people that you're paying, you are having them work on ways of bringing in revenue. So they're out there marketing, they're out there selling, they're out there, doing whatever you need to do to bring in the money. So that 8 weeks from now, at least there's a revenue stream. So that's my 2 cents on that one. I'm going to check the Q&A real quick. So the question, let's see. So 8 weeks versus 2 months could be close on the 75% rule. If 70%, will they prorate the forgiveness? I don't know. They are very clearly stating that it is 8 weeks. So that is definitely impacting some people's pay dates, especially if you are a 15th and 30th payer of payroll. You get funded and you just missed your 15th, and you have 8 weeks to get this paid. So I don't know that I don't know if they're going to prorate any of it. They want payroll costs of the forgivable expenses, which are payroll costs, mortgage interest, rent, utilities for certain. Of the total that's forgivable, they want 75% of that total to be payroll costs, I believe. I say this and I'm like, doesn't necessarily mean it's 70% of the loan balance, but you know what, I'm going to research that and find out, because it's going to be really tough to take 75% of your loan balance and ensure that it is actually going to be used for payroll costs. And there were some banks that were requesting, you know, that you were saying, this is exactly how I'm going to spend the money, so that they could come up with a 100% forgivable amount. Well, that is, to me, that was ludicrous. You cannot do a whole, a guess of how you're going to pay. You know, what happens when you go to bring employees back that maybe you furloughed and they're like, no, 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 I don't want to come back. Okay, so now you're in a hiring process, which means you may not have somebody, a body to be paying for at least another 2 or 3 weeks. So yes, there's so many variables that you want to make when you're projecting out your payroll. I think you want to make sure that you are getting, you know, figuring out that as much as possible is payroll costs. And so yes, you may very likely have to be changing a pay date by a few days so that it falls into your 8 weeks. Okay. So Beth is asking, she says that she's heard that some companies are paying their employees and they're staying home. A senator stated on TV that the loan is to cover payroll when the business is closed in order to pay the employees. People are getting confused. I forgot to start my whole production here with, I don't listen to the media. So news stories are not your source of actual information. Could you get this money and pay your people to stay home? Sure, you could. If they're staying home, and you are paying them because you can't be open, you're a restaurant, that's great. But my question would be, why did you get the payroll loan if you have to use it for payroll and you can't employ people right now? So there's definitely some issues here on the questionability of why people are getting the loan. The intent is that you need it. They're waiving the normal process with the SBA of proving that you can't get funding from another source. What's happening is people who don't really need the money are applying for these PPP loans and then saying, but hi, I can't pay my people because I have a stay-at-home order. Okay, well, you could pay them and they could stay at home for you and not work just so that you could satisfy this. Does it, I don't know that it has any different effect. You're still giving somebody money who then can use that money to pay his utilities and keep the economy going, whether they're actually working for you or not. I think it's not necessarily a good business sense to say, well, I'm going to pay you to do nothing for me just so that I can get forgiveness of this loan. Why'd you even apply for it? If they're staying at home, let them collect unemployment. So that's my 2 cents, but my overall take is reliable sources. I don't listen to the news. That keeps me from, I mean, it's confusing enough just listening to the reliable sources, reading the IRS.gov, reading the Department of Treasury site. It's a lot. So, but I do not also insert news stories into any of my research, because it's every single thing that is not from the source is a slant. It is slanted somehow. So I just don't trust it. So, all right, moving on to, let's see, what do I have next? Unemployment. All right, unemployment for self-employed persons has opened since the last time we talked. There is a process. You have to go in and get denied by the state first so that they can say, yep, you do not qualify under state unemployment. Maybe you qualify under this federal unemployment that was mandated by the CARES Act. So what's happening there, you get the notification that you have been disallowed, you go back in, you give them some information as far as what your earnings were as a self-employed person. Maybe that's your earnings from your Schedule C. Maybe that is your earnings from your K-1 if you're a partner somewhere. Maybe that is bank statements showing you had income. I had one client that showed them their 1099-K, which shows, like, Square issues those at the end of the year, showing how much credit card income came through your account. for when people pay you by credit card. And that's how you prove how much income you have. Because, especially if your 2019 tax return's not done, which has, several people have run into that scenario. There's also some indication that they kind of want you to prove you're really in business. So they're looking for business cards or utility bills in the company's name or website or something that you can say, yeah, this is legitimate business, so that not just everybody is coming in here and saying, yeah, I don't qualify for unemployment because I quit my employer, but I could qualify as self-employed, and here, let me just, falsify some information. If you didn't have current information, they're giving you 21 days to get your 2019 returns filed. So if you didn't have a current K-1, those types of things, you're able to upload that information to them. Payments have started coming, including the $600. So the $600 pandemic relief has been included. Not sure yet on how many people have gotten any back pay, as far as we go back to March 29th. And so you should have multiple weeks that are owed to you. When is that going to actually come through? They say you're eligible, but I haven't seen it yet. You will be required to go in and log your income each week. What that will do, you're going to report your income. It may reduce how much you're getting that week, unless how much income you got exceeds the amount you should have gotten for unemployment. So there's definitely going to be some give and take, some proration, and some reportability. So once you're on it, you still have to go in every week and say how much you worked, how much you're expecting to get paid, whatever. Just very similar to an hourly person, but what they're going to use for a basis, I would assume, it could be as much as you prove your bank statement, you copy of a canceled check if somebody paid you. I'm not sure. So, the question I have here at the bottom is, all right, PPP versus unemployment. I've had this question quite a bit. I'm self-employed. I applied for unemployment. I also applied for the PPP loan. Can I have both? And my opinion is no, and here's why. I think I can just jump right to this website from here maybe and show you my interpretation of this question. So here I am, I'm on labor.mo.gov/coronavirus. And when you scroll down on this screen, it takes you to the questions and answers. And this is huge. They've been updating it. There's lots of information. And I'm taking my response to this from question 15. And this is relating to an employer who says, hey, we got the PPP loan. We are bringing you back and want to pay you. The question the employee says is, can I choose to receive unemployment instead of a paycheck from my employer? Can I still collect unemployment? What do I do if I already received unemployment benefits? And the answer, if your employer has chosen to receive the PPP loan to pay employees, you do not have the choice of receiving unemployment benefits rather than the paycheck from the employer. So let's take this and substitute self-employed. So you say, hey, I'm self-employed, I got unemployment, I also got the PPP loan. And the question would be, if you as a self-employed person has chosen to receive the PPP loan to pay yourself, you do not have the choice of receiving unemployment benefits rather than the paycheck from your employer, which was the PPP funding. So that is my interpretation, and that is what I would be cautioning my self-employed people regarding this. You can still work part-time. So if you're on unemployment and you are still getting some money from some clients, but not as much as you were getting, every week you're going to report that, and it may or may not adjust how much unemployment you can get that week. But if you were on unemployment and you got the PPP, as soon as you get the PPP funding, you need to stop unemployment. You don't get to double dip into these funds. So the PPP and the self-employed unemployment is the same funding. It's coming from the same, it's all federal, it's all coming, and so they don't want people to, my gut says they don't want people to double dip on that. So somebody can feel free to correct me if I'm wrong on that, but that is what I'm thinking. Okay. So Becky asks, you know, I've applied for unemployment and PPP. Should I refuse one of them? So there was my explanation. I don't know how much your PPP funding was, and I don't know how much you're still making as a self-employed person, if anything. So you need to look at, okay, how much was I eligible for in the loan? And keep it, so the loan, even though there's a forgivable piece to it, if you can't get it all forgiven, it's a loan. You need to have the cash flow to begin to be able to pay that back in 6 months. It will be due a year after, 18, essentially you'll have 18 months to get the balance paid off. Unemployment is taxable to federal and state, so you'll have to keep that in mind as well. The loan obviously is not taxable, but I think long-term and looking into the 6 months, this PPP is going to cover 8 weeks. Are you going to be unemployed for longer than 8 weeks? Possibly. I mean, I think it's really going to be, you're going to have to do some math here. I think the PPP is going to be more restrictive in some sense, but the unemployment is going to be more reportability. You're going to be reporting stuff, and we're not sure what yet. And Deb asked the similar question. How do you decide which one's the best? So, and here's what I'm going to tell you. If your income has pretty much completely dried up, go on unemployment. Go on unemployment, because the PPP loan is designed to last, you know, not even 8 weeks, in my opinion, especially for a self-employed person. That, you know, if you had a down year in 2019, and that's what the numbers are based on, you're not getting very much anyway. And those same type of numbers are what they're going to use to determine how much unemployment you're going to get as well. So, I mean, I really think that while they're saying the PPP is designed for self-employed persons, it is so restrictive on how you can use the funds, even though they're saying 8 weeks of 52 is what we're just going to forgive right off the bat, without necessarily any type of a anything you have to actually prove. I don't know that I agree that that's really going to happen. Then it's really, what's easier? Unemployment may be easier to file right now. So that's kind of my 2 cents. But this interpretation right here, this is on the Missouri side. So if you're in some other state, it may not be an answer that applies to you. But my gut says the FPUC, which is the Federal Pandemic Unemployment Compensation, it's the same program that's funding the PPP stuff. So it's all federal money. They're not going to let you double dip, and they're going to eventually come after the people who are. So the other piece would be that, you know, you could stop unemployment once you got the PPP. PPP runs out, you get unemployment after that. Go back and claim it. That would be my answer on that one. Let's see, other questions I have. Sorry, I gotta get my cat out of the way. So I have a question from Denise. What if I just received a check from a project we did before the COVID started? Do I need to say that's income, even though most of the money is to pay out 1099 contract labor who worked on the project? So I guess Denise, I need a little more information. Claiming this for unemployment, or are you? Yeah, so I'm guessing this is in relation to an unemployment question. So yeah, so I would say that yes, you're going to have to show that as income the week that the money came in. Assuming your cash basis, which I believe you are, you know, so that you're only reporting income when it comes in. They don't necessarily have it defined that I know of that you're reporting, if you're reporting gross or net. So my opinion kind of is, okay, well, your income is really what you brought in minus what you spent, possibly. But I don't know. I have not been able to log into the website and kind of see what that reporting looks like. My husband's going to go through it with me. He had to apply for him as unemployed with his business, because it's, you know, when your revenues drop 75% in a month, in your biggest month, typically March and April are the biggest months, and he's down at least 75% in those months. So he has applied for unemployment, and we're going to go through kind of what that looks like. As far as I haven't had a chance to go through and see what the screens look like. What you don't want to get into is anything that borders on any type of fraud. So they will come after you. So I think with you in particular, Denise, you had a W-2. So I'm not sure that you would be filing under the self-employed rules anyway. So that's my thought on that, if we're talking about unemployment. So, okay. All right. Let's make sure I got everything. Okay. And I'm going to hop back over to our slides and see what we've got next. All right. So that's unemployment. Like I said, it's up, it's available. So, and it's starting to pay. So just from a time perspective, my husband applied, I would say earlier this week or over the weekend, maybe late last week. And he got a check today. It wasn't for all the back weeks. It was just 1 week and included the 600. We think that's how that worked. So, okay. Economic impact payments, stimulus checks. Did you get yours? So I have been saying for the last week or so when this started, so it started on April 15th when they announced that it was coming out. There's a website that says, hey, I get my payment. What's the status of my payment? And it was so nice of them to put it on tax day, because I guess, you know, they assumed nobody was doing anything on tax day because it's no longer tax day. And we immediately got flooded with, hey, it says that the status is not available. So I need information. Well, the answer was they just didn't have their systems up. And all along I said, the IRS is pretty antiquated. They have to shut down their systems in order to roll forward to the next e-filing season. They have to shut down their systems whenever they have a new tax year is coming. So as soon as they said they're going to base this on 18 and 19, I'm like, 19 is the year that's kind of open to them. How are they going to get to the 18 information without shutting the system down? So every day I've been going in. I haven't filed my 2019 tax return yet, and I do not have any direct deposit information on file with the IRS because I was out. So I thought, okay, I'll go check. And every night I check, every day I got the same thing that said, no, your status is not available. And people freak, and they're like, oh, they think I'm not eligible. Oh, no, if you read the frequently asked questions, it could be a number of things. They just don't have enough information. My gut said they didn't have enough information because they had to go back and somehow link the 2018 system into their 2019 system in order to get this to work. Last night I went and checked, and it said, hey, system's down for maintenance, and it will be back up in the morning. So this morning when I checked, sure enough, I got the ability to go in and update my information and put direct deposit information in. So I would say if you haven't checked since last week, go in and check. You will need, if you haven't filed your 2019 tax return, you will need your AGI, which is adjusted gross income number from your tax return. And you will need to know how much you owed or how much was refunded on the return that you filed. So even if, if you had a balance and you haven't paid it yet, and I'm guessing 2019 would be the same thing. If they don't have direct deposit information on you for 2019, but you have filed, you would need your 2019 AGI number, and how much you owed or was refunded on the 2019 return. And that was just to confirm that you are who you say you are. And then you're able to put in your direct deposit information, and it says, great, we'll direct deposit a check to you. So it doesn't tell you how much or anything like that, but it does, at least the system is finally up for those people who were like in limbo, where they just, I'm guessing it was a lot of the 2018 people. So people who, I haven't filed my tax return, and guess what? My tax return now isn't due until July, so I decided not to file my tax return right now. And so they can just base it on 2018, I don't care. But now it's up and seems to be working properly. So that's my update, and I'm excited to say that their system is actually working. And it has also actually worked for someone I know who I told them they didn't have a filing requirement for 18 or 19. I had them go to the link to put in the information there, which they did sometime prior to whenever that opened, probably. And they actually got their money this week as well. So so the system is working. It's just a matter of time before it works through to everybody. Okay. All right, let's see what's next. All right, moving through it. Economic injury disaster loans. This is the SBA arm. So when the money ran out, it also suspended additional applications for the EIDL, which had the piece of the $10,000 grant or advance that everybody was so intent on getting. It shut down that and said, if you already were in the system, they will still be working through those. The funds were continuing to flow after the money shut down, at least for the grant part, but the emails for following up with the grant have, as far as getting the rest of the EIDL, the actual loan, those have been delayed. So I'm not sure if they were delayed because they're waiting for the signing of today's bill to refund the program or what. But I can tell you that this week there were several people who applied for this and they got their grant money, the $10,000 that turns out was not really $10,000. It was $1,000 per person, per employee you listed that you had as of January 31st, 2020, up to $1,000 per person for 10 people. So if you had more than 10, you were only getting 10. It was a max. However, I did have one person who showed no employees when he applied for it and still got $1,000 from them. So I'm not sure if that was maybe the minimum. If you said 0, you at least got 1,000. I don't know. There's very little guidance. What is supposed to be, so it's going to be refunded with the bill that came in today. And I don't know if it's going to open up for additional applications or if you were already in the queue, they're going to work through those first. Excuse me. The advance is hitting your account and it will say something like SBED, something like that. It is not part of the PPP. Your PPP loan will come in with one lump, and the SBA grant comes in separately. So your PPP will not be funded in two different deposits. I had somebody today fund with both of theirs on the same day. Those were two separate things. So the portion, the 10,000 or up to 10,000 that you receive, that's a grant that shouldn't have to be repaid. We are setting up long-term liability accounts on the balance sheet for these amounts because this is typically going to be attached to the rest of the EIDL, which would be a long-term loan. And until there's more guidance as far as when they're saying, yep, this is truly a grant and forgiven, once we know that, we will be moving that to an other income account, the portion that gets forgiven, or it becomes a grant. So if you got $10,000, then and then you end up getting the rest of the loan for, another $50,000. 50,000 will stay as the long-term liability and 10,000 ends up getting reclassed to an other income account. So, but I am not putting that in other income right now because we don't have any guidance. In the people who got their money this week, they haven't even gotten an email. What happens is you are going to get an email at some point to continue the process of applying with the SBA for their EIDL loans. And that is administered through the SBA and not through a bank. And you're going to go through that process. You have to set up the account. So you're going to get an email that gives you the information to set up the account and essentially go through that process. And I've heard various things on how it's calculating how much your EIDL will be. Is it going to be, 10% of revenue? Is it 50% of revenue minus cost of goods? I've seen multiple things. I have not seen anybody's actual loan. So I don't know. I haven't seen anybody's actual email. I haven't seen anybody's actual calculation. I have a lot of people that are in limbo waiting for that email notification. So I will tell you, check your email every day because it's time sensitive. Check your spam, check your junk mail, just to make sure, especially if you already received that money. If you received that money, then you should be expecting a follow-up email. It was coming very quickly, like within 24 hours. It is now slowed. So I've had clients that got some money on Monday that don't have an email yet. And like I said, I think it could be that the funding of the rest of those loans is waiting for the signing of the additional bill today. So the other piece of the EIDL, now that this money is coming in and it's clearly hitting at the same time that people are getting the PPPs, it was always stated that if you receive the advance from the SBA and you receive a PPP, the amount that's forgiven for the PPP will be reduced by however much your advance was. So if you got a $70,000 PPP loan and you got a $10,000 advance from the SBA, you're only at the maximum you can have forgiven is going to be $60,000, no matter what the rest of your numbers fall into. So they are going to take that off of the top, just so you know, because that is, people are thinking that PPP is going to be 100% forgiven. And we've already covered that there's lots of criteria that are going to fall into that. It's going to get a little tricky. Well, this is another caveat to it. If you got the advance, they're not allowing you to get a forgiveness of the $10,000 from the SBA side and 100% forgiveness of the PPP. Again, it's kind of a double dipping thing. It's all coming from the same bill. So it's all going into the same pot, and they want to try to avoid people getting a duplication here of what they actually can get. So, so that's what's happening on the EIDL side. I continue to tell my clients that if you are expecting a reduction in revenues going forward, then you want to continue to pursue this EIDL. At times it can be it's going to be a larger dollar amount, a slightly higher interest rate than the PPP, but it will be a 10-year loan instead of a 2-year loan. Okay, so this is a good question that was brought up. The EIDL is not payroll specific. So you do not have to use funds from the EIDL to pay for payroll. If you applied for it, you may not get the grant money if you had 0 staff, although, like I said, I have one person who applied for the EIDL, said, yep, I'm interested in getting the grant ahead of time, here's my account. 0 employees as of January 31st, 2020, and they got $1,000. So it could be that if you applied for the EIDL and it's a company that doesn't have any employees, you still may get $1,000, but you also will have that puts you in the queue to apply for the rest of the loan that's 10 years at 3% or 4% or whatever it's going to be. And based on revenues, and we're not sure. I'm not sure of the calculation. Like I said, I'm waiting. I need to see if I've got any clients out there who've actually funded one, so I can kind of see some paperwork and see if it actually states what the calculation is, or if it's a standardized calculation for everybody, because I don't know that off the top of my head. So so initially, I will say that the EIDL came out and said, you know, everybody's like, I get $10,000. Nowhere was it clear that it said you're getting $1,000 per employee. That wasn't in there. I don't think it was even in the fine print, unless it was on the very, very early applications. But once they revised it to where they made it kind of the shorter application process, there was nothing on there that said it was employee driven. It was hey, everybody's getting $10,000. So I think now that they have thrown the caveat in of, well, we'll pay you $1,000 per employee up to 10 employees, that puts a different spin on it, because there are those companies that can apply for the EIDL, don't have employees. They can also apply for a PPP, but you are basing that on the owner's self-employment income. Sorry, the joys of working from home is that your pets get to participate. So I have a dog over here that can't decide what he wants to do, and a cat trying to jump up on my desk. So he gets very needy in the afternoon and wants to be part of everything. So, so what I would say is the PPP for self-employed also applies to owners of partnerships, that you can show your self-employed income from a partnership, and it has its criteria of how much it could lend based on you being self-employed from that partnership. So the not having employees does not exclude you from either one of these funding sources. The EIDL is not earmarked specifically for payroll. You can use it for operations. You can use it for to pay the credit card, to pay, you know, so that is, once that loan has gone through, there's no, let's keep track of what exactly is going to be forgiven, because it's not going to be forgiven. All right, let me check questions. Yeah, and this is, I don't know if you guys can see my cat, but okay. Does self-employed count as one staff? In relation to the question is, Deb, does the self-employed count as one staff as far as the EIDL? Yeah, so we don't know. That's where I'm saying, you know, if I had someone who is technically self-employed, has a business, has revenues, has expenses, listed 0 employees on January 31st, got $1,000. That implies to me that they're saying, okay, they're at least giving a minimum of $1,000 to people who show 0 employees. Are they saying that that's because, you know, you're considered self-employed? I don't know. So I don't really know. And I have not seen anything relating directly to how that calculation was supposed to work, and all of the information about it being tied into number of employees came out well after the application process was released. So, I mean, it was like a week or 2 weeks, and then people were like, yeah, I got less than 10,000. And then somebody's like, oh yeah, that's based on employees. And now they're finally saying it's based on employees. So, all right. So I'm going to jump into our last topic for this afternoon, except that I went too far. Hold on, I'm getting back to it. And nope, there we go. And back. I forgot how to work my computer all of a sudden. Okay, get back to being able to share my screen. Sorry about that. Technology sometimes gets the best of us. Come on. Now it's stuck. Okay, let me back to it. Okay, here we go. All right. All right, so my last topic I just wanted to reach out on quickly is this this thought and this feeling, and I'm for sure on board with the fact that even when they restore the ability to actually go to whatever store you want to go to, and they start to allow gatherings of more than 10 people, and businesses are starting to reopen, the economy was already kind of in a position where we're expecting an adjustment. I think adjustment is kind of not a harsh enough word for what I think we're going to have. But we're looking at a recession coming. So getting out of the coronavirus and the COVID-19, and we're not so much worried that we're going to get sick, but we're going to get out of this, and the economy is not going to be the same, and it's not going to be the same for a little while. And I would say that we are looking at being able to you need to have a long-term outlook on what's going to happen with the economy and with you and your business. And we spent a lot of time talking about, how to get unemployment, how to get these loans. But what really needs to happen, other than pivoting your business to the point that you can actually figure out how to get some revenue. And maybe that means you are, you're changing, to become more of an online seller. Maybe you're changing the product that you're selling. Maybe you've added delivery services that you didn't used to have before, but now and you want to continue that, because that is continuing to make you revenue. But beyond that, you need to really look at what everybody should be looking at in their business all the time, but it's much more important right now. And that would be cash flows going forward. And so I would start with things like for both your business and your personal, your household, you need to look at restructuring debt. Can you refinance right now into a lower interest rate? Can you get some deferrals on, loan payments, things where it would allow you to kind of hang on to some cash right now without penalty? Can you get some interest reduction capabilities through if you have a large credit card balance, or you have a loan, or essentially restructure some things so that there's less money coming out of your pocket and looking forward to 3, 4, 5, 6 months down the road. I would say you're looking at for sure wanting to be able to structure as much as possible for this short term, get through the summer, but also look forward into, hey, we need to get through the end of the year. So the loan money that's coming, it's not going to last forever. For your economic impact payment is not going to last forever. So you just really want to start, where can you start reducing some costs or deferring some costs? The other thing is to go through both business and personal. How is your money being spent? And ask the question, is this essential in the next 6 months? So I would say both business and personal, we all end up with things that we have signed up for that we are not using. Right now, many of us may have gym memberships that we are not able to use. So we need to cancel those, and we need to resubscribe when we could actually use them. So there could be things that you've been paying for a long time where you just haven't taken the time to really pay attention because it wasn't that important. You're like, it's $14.95 a month. Okay, well, how much are you really using that? Because if there's enough of those things that start to add up to some real dollars, and even if it doesn't, I'd say start canceling the non-essentials. And everybody's going to have their own perspective on what's essential to them and what's not. And that's okay. Look at it from the term of what can you live without and what you can't. And that may transition. Right now you can say, yeah, I have to have that. But 3 or 4 months from now, you do this exercise again and go, yeah, I can really live without that, because we don't know how tight it's going to get. So review, like I said, business and personal side. You'd probably be amazed at how much stuff is hitting your debit or credit card on a monthly basis that you're like, I don't even know what that's for. What am I paying? What subscription is this? Um, so start canceling things. Don't just identify them, but you need to go through your different places and you need to actually cancel them. You need to go through and say, I need to do the legwork, and make a list of who do you need to call, what website do you need to go to, and start the process. Because sometimes you're hitting in a weird place in the cycle and like, oh yeah, we can't cancel that for another, 5 weeks because we just, or whatever. And so you want to get this going so that you can get them stopped. And some things are very difficult to cancel intentionally by them. They want to make it hard. They want to make people give up because they're getting recurring revenue and they don't want to lose it. But you need to be insistent and you need to find those sources that you can just eliminate. And I would say you're looking at things, what you can live without for at least 6 months. So it doesn't mean forever. So maybe you've got subscription to, a music subscription for Spotify and Pandora, and you're paying a little premium for a premium subscription on Stitcher or podcast services. How many of those do you really need? All of them have a free service available. So yes, there's advertising. Can you live with advertising for 6 months? Probably. If it means you're starting to save $30, $40, $50 a month. Doesn't sound like a lot, but if this economic downturn extends very long, everybody's going to be looking for everything they can get. And then my last recommendation, I know it sounds terrible and it's probably not what anybody who is a real economist wants to hear, or this is not a situation where I feel like we're going to stimulate the economy, but you need to hoard some cash. So for me, that means, this economic impact payment that I think I might actually be getting now that they updated their website, I'm not spending it. If you have a tax refund coming, don't spend it. So many people use those things and think, oh, I'm going to go on vacation. Well, guess what? We can't go anywhere right now. We may be able to go somewhere this summer, but be conservative. So take those monies and stick them somewhere, because you may have a job right now and the economy may come back and you can start gathering, you start going back to how you were working before. You can get back into the office. You can get back into actually going out to clients and doing the work. A hair salon can start seeing customers again. And, there's so many people that are impacted, but I don't think you want to get crazy. If you're going to refinance, maybe you're going to take some cash out so that you've got it, so that it's there for if this is prolonged enough, and that the businesses are going to be affected. There's not a guarantee that your business is going to come back 100%. And you may need to supplement what you were taking out of your business with some personal cash. If you're employed by somebody, you may have a job right now, but you get towards the end of the year and they're like, yeah, it didn't come back like we wanted to, and we can't continue to either employ you, or we need to give you a pay cut, or any of those things. So I think right now it is use caution and take what we've learned from being home for these several weeks, where there's not a lot of places to go and spend money. People are eating more at home and cooking more and probably spending less money than they have in a very, very long time. I would say the economy opens back up, the stay-at-home order is lifted. Don't go crazy. Take the budget you've lived within in these last few weeks and continue it, because this is going to be difficult. And because the federal government has funded so much into keeping the economy going, there's not going to be a lot more money coming. The taxes are eventually going to have to go up to pay for all of these things. So, so maybe this is a little bit of my soapbox, but I don't think somebody can tell me that I'm wrong, that, we're not going to come out of this and suddenly business is booming for every industry in the nation. Some industries are going to be hit very, very hard. and some are going to be hit in a trickle down fashion. As you know, so I'm kind of one of those trickle down businesses. If an industry that's in my client base is hurt and they can't survive a downturn in the economy, that's somebody who's no longer paying me to do work for them. And there's a lot of businesses like that. So I think just planning for the fact that no, you can spend some, but don't get crazy. Don't get to the end of the summer and say, I'm out of money. And now all these people I brought back onto payroll, I have to lay off again because I didn't plan ahead. I didn't figure out what my revenue streams are going to be, and I didn't cut expenses, and I didn't save any cash. Because any of those three things, if you don't do something with all three of those things right now, you could be in a world of hurt by the end of the year. So that is just my 2 cents, I guess. So take it as you will. I mean, I hope some of you understand that this is, this isn't necessarily gloom and doom, but it is caution. What is happening right now for anyone who's in business should be very cautious on how they proceed. If you're in an industry that is booming right now, thank you. I'm so glad it is that way for you. But I would say that is the minority. We are not in a position where every single industry is going to come out of the COVID-19 pandemic in a great position, and it's going to be very tough to recover. And I would say, look at restaurants and bars. That is going to be a long recovery time for them. People are going to be shy away from going to those settings, and it's going to be tough for them to get back up to those numbers. And those are typically, in an industry that lives, cash tight to begin with. So, so I'm just saying, if you find anything helpful in this is, look at, take advantage of the things that a lot of the financing companies are providing right now. Take advantage of it. You may not need it right now, but if you take advantage of it now, it might set you up so that you don't need it later when they may not be offering it. And then obviously look at your expenses, come up with revenue sources, and start hoarding some cash. So, all right, let's see if it'll change my slide. Doesn't want to. Oh, there it goes. All right, as always, I have my reliable resources list here, irs.gov, departmentoflabor.gov, labor.mo.gov/corona. That's where I saw the information relating to, can you be on unemployment and have a PPP loan? And then these others. And as always, these will be in the email that you receive for having attended. So let me see if there's any other. Okay, so I had a real quick question on what is the website for the where to find the economic impact payment. And so I'll just click over to this irs.gov site right here, and I will show you right where it is. So if you actually are on the home page, if you go to irs.gov, and the very first button on the right side says Get My Payment. And this is, when you come in here, it will tell you what you may need. And there's a blue button in the middle of the screen that says Get My Payment. And this is where it will take you into the opportunity to put in your social security number, your birthday, your address, and then it will tell you, hey, we found you and we need some additional information. And that's where you'll put in your AGI, adjusted gross income, and your refund or overpayment from the year before. All right, see if I got anything else. If not, I'm going to wrap it up. Let's see. Okay, so I don't see that there's anything else. I am going to continue to bring these to you for free as long as there is additional information coming. Anybody who has any additional topics they would like to hear from me on, please just shoot me an email. That would be awesome. And we will, like I said, I will continue as long as I feel there's, you know, some additional information coming and people are needing some guidance, because there's so much. I'm always coming on Facebook Live. I'm typically doing that on Wednesday afternoons at 2 p.m. and doing some Q&A or some updates if anything new has come out. As always, you can reach me at WLXco.com and sign up. I will be putting some classes and workshops and webinars up there for in the future. As we get through this pandemic, I'm going to kind of do a little pivot of my own and start doing some more teaching online and being able to bring information to you on various topics. So feel free, www.WLXco.com. And then, as always, our website is asg-stl.com. All right, everybody, have a wonderful Friday afternoon. I look forward to hearing from you as you navigate all of these waters and you know, figure out what monies have come in and how you need to account for them. As always, send me your questions and I will address them as much as I can.